11 things you need to know about the Walgreens Boots Alliance if you're thinking about investing in this stock. Today we're going to be taking a look at WBA. I keep saying Wall Boots, WBA. I might just say WBA a bunch of times. Walgreens Boots Alliance is one of the biggest pharmacy, drugstore type chains in the world. Today we're going to be taking a look at what's really good about them, why some people love their stock, and 11 things you should consider if you already own them or if you're thinking about getting into this stock. I have been getting a bunch of requests to do this stock over the last few months, and so we're finally getting to it. Sorry for the delay, guys. Like most stocks, WBA has also been beaten down thanks to the pandemic going on around the world, and actually hasn't quite recovered. Check out this 5-year chart. Check out this 5-year chart. Check out this 5-year chart, which gives you a good idea for how the stock has done in the recent years. We're currently sitting at about 48 bucks, so it looks like we've hit the bottom there. But the recent price spike has seemed to set the PE ratio a little bit wonky if you're looking at like instant measurement websites. But with the stock prices relatively low historically, if you like the fundamentals and you're looking for a little bit more balance in your portfolio into something a little bit more tangible, something maybe a little bit more bubble-proof, and kind of recovery stock-ish, should be doing better in the coming years once we figure out the whole pandemic thing. This might be a good stock to add to your portfolio. Add to that, it also has a dividend, which I'll get to in a minute. Number 1, Walgreens Boots has more shops than you thought. Walgreens Boots is friggin' huge. They have 19,000 shops around the world. They cover all 50 states, and I think they operate in about 25 countries right now. Walgreens in particular specializes in high traffic locations, which boosts their income per square foot, which we'll get to in a minute. And they also boast the largest market share of retail pharmacy too. Interestingly, from their locations, they have access to about 80% of the US population. And that's something that bigger potential competitors like Amazon, who's talking about starting Amazon Pharmacy, may not really be able to compete with. Number 2, Walgreens is not just the shop down the street from you. Even though Walgreens' market cap sits at about $41 billion, annually they generate about $140 billion in revenues, and they're made up primarily of 3 different segments. Number 1 is US retail at about 75% of their total revenues. Number 2 is international pharmacy, which makes up about 10%. And number 3 is pharmaceutical wholesale, which makes up another 20%-ish. We'll get more into what's going to be happening with the wholesale part here in a minute as well. Started out in 1901, Walgreens Boots Alliance generates more than 1 billion prescriptions per year, which works out to about 1/4 of the entire drug market in the US. The pharmacy portion of the business generates about 3/4 of shop revenues, and the average shop generates about $13 million per year. Number 3, Wall Boots' influence is growing. WBA holds strategic partnerships with AmerisourceBergen, owning 26% of them, and Sinopharm holding Quota Drugstore, owning 40% of them. These partnerships were formed to boost ARPUs through offering incremental services. And in 2017, Wall Boots acquired 2,186 Rite Aid stores for a little over $5 billion in cash. One of the really tricky things about the drugstore business is that just selling drugs, and even actually all of the logistics involved with being able to sell drugs, when you can leverage different partnerships to acquire more scale, that can end up really affecting your bottom line and boosting margins. And additionally, cross-selling through these partnerships is going to become more and more necessary to stay competitive as they continue to grow. Another partnership they forged in recent years is with the American supermarket Kroger, where they started to offer small drugstores within Kroger supermarkets. But Kroger also said, okay, let's use all of your 16,000 locations or whatever it is, and our customers can order groceries through the Kroger website and then pick it up at their nearest Walgreens. So partnerships like this end up being synergistic for both companies. They end up generating more sales and more revenue, and also more stickiness for these brands as well. They also have partnerships with VillageMD, Humana, LabCorp, United Healthcare, and more. Number 4, Walgreens per store figures are also pretty impressive. Because I'm trying to keep this video more concise, I'm not going to be doing a whole lot of comparison with competitors like CVS or Rite Aid. If you would like me to do so, please leave a comment down below. And while you're at it, please leave a thumbs up too. That helps our channel a lot here. But here are some key metrics comparing these two, just to give you an idea of where Walgreens stands kind of in the market. I mentioned earlier that Walgreens stores average about $13 million in sales per year. CVS is pretty far behind them at only $8.6 million per year. And Rite Aid is basically nowhere to be found on that chart either. And when it comes to the pharmacy portion of the store, Walgreens pharmacy sales basically double CVS's sales at 6.5 million versus I think it was 3.2 million. Number 5, Amazon Pharmacy is coming, we think, but Walgreens won't give up without a fight. Since Amazon doesn't have a lot of physical locations, it seems more like they're going to be targeting recurring long-term mail order shipments, and that's becoming a smaller part of Walgreens' business model. By implementing partnerships like the one they have with WebMD, Walgreens is working to provide more immediate medical care than would be possible from a strictly online competitor. Some of these services include lab services, imaging, and regular physician visits as well. So you wouldn't be able to do those things with Amazon. And Walgreens is investing more and more in becoming kind of like a little healthcare center right down the street from you. Number 6, most recent quarterly results look a lot worse than they actually are. Here are some year-over-year results from their most recent quarterly report. Revenues were up 5.7% to $36.3 billion. Last year's first quarter produced an operating income of $1 billion, but this year's first quarter produced a loss of $440 million. Check it out here on the consolidated condensed statement of earnings. It looks really frightening when you see at the bottom a net loss compared to last year's first 3 months in 2019. Remember, Walgreens' fiscal year starts in August. That's why the first quarter ended in November. But you see a big net loss there. Basically, if you slide up to about the 5th item there, you see an equity earnings loss in AmerisourceBergen. It worked out to be almost $1.5 billion charge. Sliding down all the way to the bottom, when you combine all of those numbers, basically it looks like they lost 36 cents per share, which was probably alarming for a lot of stockholders. But basically that huge loss comes from the AmerisourceBergen write-off. And we're going to get more into AmerisourceBergen here in a minute because AmerisourceBergen actually bought Walgreens wholesale pharmacy operations for $6.5 billion, which is number 7. And so AmerisourceBergen bought the operations and they're going to be taking over the wholesale pharmacy operations, which basically Walgreens is saying this will allow us to focus on our core competencies. I mentioned earlier that wholesale pharmacy makes up about 20% of the revenues. So that's like not small, but getting in $6.5 billion is also pretty dope for a company like Walgreens in a situation like they're in. We'll take a look at the balance sheet in a minute, but generally speaking, they're not like dealing with super heavy debt or anything like that. In the deal, they also extended their commercial agreements until 2029 for Walgreens and 2031 for Boots. Number 8, free cash is flowing. Free cash is considered by many to be the actual gold standard of understanding how a company is doing, especially an established company. And their free cash flows continue to grow. They're up 13% year over year, or $90 million, up to $763 million for the year. Number 9, vaccinations are coming, but don't get too excited about the bottom line yet. A lot of people have been thinking dude, with the vaccinations taking off, administered by places like Walgreens, aren't their revenues going to skyrocket? But you also need to keep in mind the fact that lockdowns have shut stores down in many different parts of the country and also kept people away from the stores. But also services they would normally be doing, like flu shots, have also taken a big hit. So even though vaccines are going to bring in a bunch of income, they're losing on a bunch of things that they would normally be doing anyway. So management has basically said, don't have really high hopes for how this is going to hit our bottom line. On another note, Walgreens boasts 2.8 million administered tests already, and they're working on vaccinating residents and staff at more than 35,000 long-term care facilities. Number 10, Walgreens Boots Alliance is a Dividend Aristocrat. I've found differing statistics, but it looks like they've been increasing their dividend for at least 40 years, if not 50. Let me know if you know the exact number down in the comments section. And currently, they're offering a dividend yield of just under 4%, which is not bad. It's pretty safe to say that they're going to be continuing that habit of increasing their dividends. While things have been tough in the last year, they've halted their stock buyback program, but they're not changing, and I think they're not going to change their stance on dividends and continuing to increase that dividend year over year and continuing to grow it steadily for stockholders. Number 11, Walgreens Boots Alliance is aggressively cutting costs. In 2020, Walgreens Boots announced the plan to cut costs by $2 billion by 2022. This will be made up primarily of further digitalization, and some job cuts as well. With their cash and cash equivalents up by more than 30% to $1.3 billion, along with that Amerisource-Bergen deal coming up on the horizon, I think you can be hopeful for a very, very appealing balance sheet in the coming years. So what do I think about Wall Boots as a stock, WBA? I think I've actually owned it in the past. I no longer do, but it really depends on your needs and your goals as an investor. I think a lot of stocks that are really trendy, really kind of sexy on the internet right now are very like, is it a bubble? Is this thing gonna pop sometime soon? You know, and there's a lot of hype going on and there's a lot of like potential change with a new presidency and stuff like that. And I think Walgreens could be one of those ones that you add to your portfolio. It'll give you a good dividend. You can kind of just, not worry too much about it. And probably it's going to be growing back to a stock price like it was in previous years. I think Amazon Pharmacy and also CVS and other competitors may, bring a bit of a fight to it, but I think it's not going to be like, oh, Walgreens is done now kind of thing. So this could bring some stability to your portfolio. If you are a very dividend-centric investor, you probably already have this stock. It's one of those solid stocks that's not too expensive for what you're getting. Personally, for me right now at this moment, there are a few other things that I'm looking at. I mentioned in previous videos that I've done recently, stocks like Skills, stocks like Blade, stocks like Palantir. Those are a little bit more exciting for me, for my portfolio right now. So I'm not personally grabbing any Wall Boots right now. What do you guys think? Are you grabbing some? Have you had some? How long have you had it? How does this fit into your portfolio? Looking forward to hearing your guys' thoughts soon. Thank you guys very much for watching all the way to the end. I love you guys and talk to you soon.